Hello and welcome to this session brought to you by Rapid in collaboration with Singapore FinTech Festival. My name is Aitor and I lead the sales and business development team for Rapid in Asia Pacific. And today I will be hosting a panel discussion on a topic that as a business leader is very near and dear to me, which is growth and expansion strategies for FinTech companies. This is a live session. It's just 4 o'clock here in Singapore. So please remember that you can submit questions and there will be a Q&A at the end. Before we start, let me share some interesting data points to set the context for the discussion today. FinTech startups in Singapore have collectively raised close to $500 million in equity funding in the first quarter of 2021. That's a 355% increase from last year, according to a recent report by Boston Consulting Group. The surge in investments was largely driven by Graph Financial Group in January, but there are other notable rounds, including Indonesian fintech startup Payfast investment in Xverse or Endoa Series A round. The increased funding in Singaporean fintech startups also points to the rising financial inclusion in Southeast Asia, with more players entering the banking system to cater to the large underbanked and unbanked population. In many cases, a significant portion of the investment received by these companies will be allocated to growth and expansion initiatives, which is our topic for today. A study from New Fund late last year showed that almost 70% of fintech executives expect to expand into new markets in the next 18 months, with almost 1/3 ready to expand and actively seeking growth opportunities. So let's find out more, and allow me to introduce my fellow panelists today. I'll start with Sharon. Sharon is the head of regional payments, Southeast Asia at Xverse, a digital payments infrastructures that focuses on local payments methods in Southeast Asia. The firm is most recently part of Fast Financial Group. And in addition to her role at Xverse, Sharon is an avid supporter of the fintech industry through her angel investments in crypto, fintech, and Southeast Asia-focused venture funds. Welcome, Sharon. Thanks for joining us today.
Yep, thanks, Aitor. Hi, everyone.
Next is Sandra. Sandra is CEO at Igloo, a full-stack regional insurtech firm based in Singapore, with the vision to provide insurance for all. She's also former CEO at CardUp, and she's been working in C-level positions in fintech companies in Singapore for the last 5 years. Welcome, Sandra. Great to have you with us today.
Thanks a lot. Look forward to the discussion.
And finally, Rohit. Rohit is the founder and CEO of GoTrade, a Y Combinator-backed mobile brokerage, which allows users in 150 countries to invest commission-free in fractional shares of US stocks. Welcome, Rohit. Pleasure having you here today.
Thanks, Aitor. Looking forward.
All right, so context set and introductions made. Let's start the conversation looking at the broader picture first. So Sandra, let's start with you. You've been in the industry for quite some time now. So what are the most effective growth strategies that you've seen for B2B and B2C companies? And we've typically heard about the build, buy, borrow framework in some cases. So what can you share with us based on your experience?
So ideally, I guess all of them, depending on what you need at what point. I think most companies, however, just use one or two typically, and that depends on what they're most comfortable with. So I think every company or most companies are using the build approach because it's just very important for a company, and then also typically the easiest to start with developing certain expertise inside. The more companies grow, you look at also acquiring expertise from outside. The third one, borrow, is probably the one that is used less, and the problem is there that it's a tricky one because it depends on how much you trust the partner. It depends on how much your vision is aligned. So yeah, like ideally a company would use all of them. I think where it works very well is when you look at football clubs, when you look at maybe McKinsey, which has managed to combine the three at the same time very well. If you ask me what company that that I'm aware of here in the region which has used all of them, I don't know. I think it's we are all like, or any company is trying to find that right combination, and it really depends on the skill set that you have, because every company is more comfortable with one of the other or the other. So there are some companies that are following a heavy M&A approach because they have the in-house expertise, and others are focusing a lot on building everything in-house, even if sometimes it doesn't make sense. So I think personally, I have used mostly the build and the buy approach as well. I think where I like personally have or trying to put more focus on is really also considering that the borrow approach much more.
Thanks for sharing, Rohit. What about you? What are your thoughts? I mean, have you also, in your experience, been focusing mostly on build, on buy, or you've seen all three playing out?
Yeah, so our industry specifically is quite interesting because there's mostly legacy players in there, but also at the same time, the path to the market is so it's not direct. There's no way you can get direct access to the US market unless you're a full-scale clearing broker in the United States. And so we've had to rely on the build and borrow method in parts, and borrow in some ways. We leverage existing infrastructures, partners, and it's just the nature of the industry that we've needed to do that. There's only one self-clearing broker that's been built in the last decade, and that's Robinhood. Nobody else has done it over the last decade, and every other broker basically has to leverage our existing infrastructure to get to market. We looked at partnering with brokers to power our front end. However, that the learning there was that we needed to control some element of the stack, and so that's where we ended up adopting the build method. So we licensed ourselves as a broker, and so we're able to control everything from KYC down, everything that affects the client experience on the front end. However, we do need to leverage existing infrastructures on the borrow side. On the buy side, I think that's something I've seen play out, but that's usually at later stages, obviously, because you need to have certain scale, you need to have certain dry powder in order to be able to do that. I believe that, again, depending on which specific industry you're in, buying might actually bring in a ton of legacy tech that would be a nightmare to integrate into a brand new stack. And so that's something that, depending, again, specifically on which industry or which vertical of fintech that you're in, I am quite hesitant to take a position on quite yet, especially for our company.
Thanks. So definitely so far, build and borrow might be the winners of the three. Both of you touched on partnerships, which is a topic that I wanted to bring up as well, because we've seen it being an integral part of many growth and expansion strategies. So Sharon, when it comes to partnerships, how do you ensure that the capabilities are complementary, that there is brand alignment, and basically that they're the right partner for your company? And also maybe as a follow-up as well, do you look at the longevity of the partnership, or is it okay if it's something more short-term focused?
Yeah, okay. I guess when it comes to partnerships, there are often two types. That is it a demand side, merchant acquisition partnership, or is it kind of just a coupling of products kind of partnership, right? So two types. End of the day, I think both of it, but regardless of whether it's demand side or the product side, I think brand alignment in general needs to happen. But definitely more so for the consumer or customer facing side, because you're kind of speaking the same messaging, right? But I think end of the day, it's not just in terms of capabilities. I guess it comes down to whether or not together the product market fit or the alignment is there. So I think Xfirst is quite unique. We kind of had a whole different types of partnerships throughout our whole growth. And maybe going back to your first question, to buy, borrow, or build, Xfirst, now we are part of Fast Financial Group. At the earlier stage, they are really kind of Payfast, the company which does cash-in payments in Indonesia amongst the warungs or the mom and pop shops, and we were the underlying payments vendor for them. So that partnership kind of, just as a client vendor, kind of went on for very long, but we realized that, hey, together to service this whole market, we need to merge together. So that's where the concept of longevity really came up as a discussion. We realized that we were so codependent together, and our team's capabilities from the product stack to all the way to legal, because definitely when it comes to fintech, there's a lot of regulatory requirements to fulfill. And also then, our networks on the demand side was a very nice fit. There was very little overlapping. So I think together if we came under one company umbrella, it suddenly made us realize that we have a way larger customer segment too. So I think we kind of had the whole spectrum, but I think it depends on, if you actually go down to the level of partnership that Express and Payfast had to form Fast Financial Group, it's very rare, I would say, especially in Southeast Asia, where there's two, homegrown startups coming together into one. Most of the time it's really a straight out M&A, like a big company, watching over maybe a local partner, and then they acquire. So for us, I think we kind of took the partnership on a whole different level, and it really came down to the decision because, Brand was there from the product, and all the back-end capabilities was a very complementary fit. On the demand side, together we both service different segments. So under one company, it became a larger, broader audience that you can now fulfill. So that's our personal experience, I think, when I kind of describe our whole journey together with this particular partnership. Yeah.
Okay, thanks for sharing. And it's one of the comments that I made in introduction as well, right? One of the most notable investment rounds that we've seen here in Southeast Asia in the beginning of the year. So congratulations on that.
Thanks.
We've been talking about strategy, and the strategy is critical, but after that it comes planning and execution, right? Which is when a lot of the companies also find it more difficult. So I wanted to touch a little bit on that and hear what are your views on planning and measuring growth. Some companies would look at the number of markets they've entered, for example, in any given period. Others may look at the top line and see whether the top line has grown. So there are different ways that we've seen that happening in different companies. And I wanted to hear your thoughts on that. So Rohit, maybe we can start with you this time. What can you share with us based on your experience around planning and measuring growth?
Yeah, so I think each company needs to start with a growth North Star. And that North Star is actually the metric that would define the success of the company. And that's a single metric. So for Airbnb, for example, it was nights booked. For Uber, it was rides taken. And each company needs to actually come to that point. And we have that number as well, because that number, or that North Star, is effectively going to be, you can break down every single metric in your company that makes a difference and pull levers to actually affect that number. And then it's a decision on the strategy perspective, which of those levers would you like to impact? For example, with the Airbnb example, nights booked, that's basically the number of users times the average number of nights each of them books. And so you could pump in more users, or you could get each existing user to book more nights. And pricing and all those things actually fall in under that one factor. How do you affect the North Star? And so I think that's the most important starting point, is to figure out what's the growth North Star for the company. And that's usually a function of what creates value for the customers that you're serving, whether in a B2C or B2B context, as well as what are the numbers that actually prove product market fit, actually prove market depth and scalability of the product that you are building.
I see. Thanks. And Sandra, have you seen anything different? I mean, have you also seen this North Star concept on growth, or have you seen anything different?
Very similar. I think, every company needs to identify where it wants to get within a certain time. Like if you look at the future, what do you actually want to be? And then I would break it down into what you need in the short and medium term in order to get you there, which is very often numbers. They can be measured very easily. But then the second part is also how can you, or what do you fundamentally need to change as a company in order to get you there in the long term? And this is a bit trickier to measure because it's not necessarily like that North Star metric or like a dollar amount, but it might mean that you have to to launch new products, that you have to redo your setup. You have to work on getting rid of legacy systems, depending on what your company is. And then there, it's extremely critical that A, you communicate it to the team, like A, you identify it, sorry. B, you communicate it to the team, and you really break it down into these steps of where are we right now and where do we need to get and how can we get there.
And just a quick follow-up on that, right? I think that communication to the team is probably something that I've also noticed that sometimes may be a challenge in itself, right? And that potential communication breakdown, right? When a certain group of people decides on the strategy, decides on the way forward, and then something happens that at execution level things are not moving forward, right? So maybe you can comment a little bit on that, or maybe any best practices or tips for the audience.
I think it's something that probably most companies struggle with, and no matter your size, you need to, like, as an executive, it should be your main focus, like making sure that whatever is being discussed on a strategic level within the management team that is relevant to everyone else in the company, you communicate it and you make sure that you're as clear as possible, and you make it digestible for everyone in the company. So in terms of best practices, I guess that really identifying these two things, like Rohit said earlier, identifying the North Star, but also identifying where we want to be as a company, and then breaking it down into quarterly goals, into monthly goals even. Yeah, it's and then just like test and adapt and improve, depending on the feedback you get from the team and whether you sense that it works or not, what you're doing.
Thanks. Yeah, I mean, I definitely see that happening as well, right? And there's definitely no magic formula, but I think something that I would definitely agree that all executives will need to pay a lot of attention, right? Otherwise, all the time spent at a strategy level and ideation, right? If things then are not going to be executed properly, then it will be pretty much a waste of time, right? So something that everybody will need to keep in mind. Sandra, we stay with you, and some people in the audience may be wondering if there are any shortcuts when driving growth and expansion strategies. And this may be the $1 million question, but perhaps you've seen something that would be interesting to share with everyone else.
So shortcuts, I would say, as companies that operate in regulated industries, try to use partners and try to use partners that have the relevant licenses in markets you expand into as much as you can, especially in order to test the initial market demand. If you try to reinvent the wheel and build everything from scratch for each market launch, you get stuck in that planning phase, and then trying to launch or to come up with a full launch in each market, and it basically prevents you from testing market demand. It prevents you from pivoting and from improving. So shortcuts in regulated industries: find partners that you trust, that probably goes back to the partnership, that where the brands are aligned, where the capabilities are aligned, and launch with them, with the help of them.
Thanks for sharing. We go back to the topic of partnerships again, just to reiterate how important that might be in some cases. Sharon, over to you now, and maybe if you can share anything around shortcuts as well. But I was curious to hear your thoughts as well around pitfalls, right? Which is something that a lot of companies, and most companies, I would say, would find when executing and developing all these expansion strategies. So maybe you can share a little bit from your experience.
Definitely. I think fintech in general is an interesting industry, right? Compared to other startups' growth plans, because we are actually very dependent on the local regulations and banking infrastructure, or fund flows, or other types of infrastructure unique to our respective fields. So I think common pitfalls, not common pitfalls, but pitfalls that we have made is where sales or go-to-market get ahead of the product readiness. So it affects your metrics, it affects the expectations on the team, If your product is not fully well built, whether or not it's entirely by yourself or whether through partnerships, but you go very aggressive on the merchant acquisition or adoption, sometimes you will really hit a roadblock of whether or not how well you're able to service the customer. Because at the end of the day, I think we're in a unique industry where we have to kind of cover all grounds. Can we facilitate such money flows, or can we facilitate such purchases fully, to what we deem as a minimum desirable level for our customers? So you really have to make an important judgment call that sometimes, as much of that you might have taken some time to plan, whether it's through partnerships or yourself, you really have to make that judgment call to whether or not how ready your product is and how attractive the product is if you were to hit the doors right now today. So yeah, we have definitely made mistakes whereby we wanted to be more aggressive in marketing or sales prior to perhaps how ready our product is. But I think the minute you kind of realize that you have to internally get consensus to kind of hit the brakes very quickly before things get out of control. So luckily we haven't had the second scenario, but I think it really needs a lot of discipline and immediate internal alignment once you start to notice the possibility of that happening. Yeah.
Yeah, you touched on a great point, and I've seen myself in that conversation sometimes. So maybe I don't know if there's again any best practice or any sharing that you could do around the point that you made on sales getting ahead of product, right? And I think this is something where a lot of companies, and particularly some founders, right, and executives in not just in fintech but in other industries as well. You'll see how you need to manage that product readiness and sales being able to at least have some lead time, right, for them to start putting that product out in front of customers. And sometimes there will be other point of view that will be, well, we need to wait until the product is absolutely ready and tested to put it out there, right? But at the same time, you might be missing out on maybe a few months in some cases, right, of your sales teams being able to put it out there. So any thoughts on that or any best practices that you can share?
For us, I think it really comes down to internal communication. So sales team and products team, they really have to have multiple syncs. I think checkpoints in a week. Don't just wait for like a monthly sync. So that's one. And I think it's a healthy balance of expectations, trickling from top down really. Where if for some reason, let's say a sales can't close or a campaign doesn't fall through, I think really come back together and huddle to kind of reflect on what were the failure points. Was it really a sales or marketing effort, or was it in a case whereby the product was just not ready enough or not suitable enough for the client to use? And that's where when you're making the campaign pitch or the sales pitch, try to kind of leave avenues for capturing customer feedback. So such that, in the case of lack of adoption, you at least get some feedback and then you make the assessment of that feedback. Was it due to the product readiness? So hopefully when you roll out a campaign, whether it's a marketing driven campaign or it's a sales driven campaign, try to create the avenue of capturing user feedback and really have that feedback internally circulated on a weekly basis. Yeah.
Yeah, and this is a good point. The whole feedback loop between sales and product is something that I've seen making a big difference as well in companies that give priority to that and they spend a lot of time doing that, and maybe as compared to other companies that may not spend as much time on it. So thanks a lot for sharing that. Rohit, anything to add on shortcuts or pitfalls based on your experience?
Sorry about that. So I think the biggest shortcut is actually implementing the right process. So there's this very famous story that Twitter's growth was stalling way back, and what they did to actually 10x the growth was not, there was no silver bullet, or there was nothing that they launched specifically that did it. What they did was started running 10 experiments a week. And if you run 10 experiments a week and then feeding into Sharon's point of first of all, that's extremely hard to do, but even 2 or 3 experiments is a fantastic start. But if you run it on an experiment basis and use that process and have those feedback loops in place and you learn from those, I think that's the actual biggest shortcut rather than taking big swings, because in the space that we're in, sometimes taking those big swings takes 3, 6 months, 12 months to actually get something lined up and ready to go. In terms of pitfalls, it's again somewhat linked to that shortcut, is that build it and they will come mentality. So because things in the fintech space sometimes take such a long time to spin up, you can't just build it and then hope people will come. So you need to be very close to the customer. And I think that applies throughout the organization, whoever you are, whether you're in sales, whether you're in customer support, or all the way up to the CEO. I think everyone needs to be very, very close to the customer. And that is the shortcut, but that's also the pitfall that most companies tend to run into, is that they're too far apart, have this build it and come mentality, and they will come mentality, and they're not listening to their customers, and they're just taking the big swings instead of taking that experiment-based approach. And
do you think that those 10 experiments a week, or just trying at least to do that experiment, be in that experimentation mode, what do you think is the role, let's say in your case as well as co-founder, right, and CEO, right? I mean, how do you see your role, right, as CEO and co-founder of a company playing when it comes to that culture of experimenting versus, let's say, the rest of the executives or the rest of your team?
Yeah, I think it's where we allow and we actually encourage failure. And I think that needs to come all the way up from everyone on top, because if you run an experiment and you miss it, and you run 3 experiments and hey, all of them don't work, you're going to miss your numbers for a week, or you're maybe going to hit your numbers for a month. But that and that pressure and that kind of, hey, you can't miss your numbers, that push doesn't work when you want to have an experiment-led culture and taking that approach. And so I think that's the biggest thing, is pushing to the team that yes, we're going to try and hit these numbers, but are we running experiments? What are we doing? What are we learning? As opposed to, oh, we hit the number this week, great job. That's not the only metric that matters, because if the more you learn, eventually you won't even need to try to hit those numbers, and your numbers you're trying to hit are 10x higher.
Right, yes, definitely there's a lot of value in those learnings that sometimes may be more important depending on the stage of the company than hitting your actual weekly numbers, even though of course that's always important. So we were just talking about pitfalls, and I wanted to get your thoughts on one of the most challenging aspects of expansion that companies often face, which is customer development and market expansion, and that may vary considerably depending on the different geographies. So I wanted to explore that a little bit more. Sharon, maybe we can start with you and maybe sharing your perspective on Singapore versus the rest of ASEAN markets.
Yeah, so I'll share my experience from a B2B kind of experience. I think B2C is, there's even more local nuances. So Singapore, when it comes to acquiring businesses as your target audience, I think we kind of have it somewhat easier in Singapore because the market is smaller. It's more homogeneous as well. So it's kind of a good test bed, and the timeline to go to market, I think in general, our team actually has a shorter timeline to see whether campaigns work or not, because the market is smaller and more uniform. But in ASEAN, so for us, let's take Indonesia, for example, it's very, very diverse. Even in the category of SMEs, it's so different. So, and hence, to find the right distribution channels to reach out to each of these target segments is very different. That's where we have to really lean very closely to our local teams. So I think that's where, if your HQs are in Singapore, you kind of need to have that strong awareness of how much you have to lean on your local team, and really try to give them that autonomy and also resources right up front to experiment and find that local distribution channels to get to the right market. Yeah, so that's kind of our initial challenge was perhaps not enabling our local team so much. But again, as soon as we realized that was kind of the bottleneck on our part, we kind of gave them very clear resources and communication upfront, check in on them maybe a week or 2 later and really just see how their navigation has been locally. So I think that's a very different when we are trying to tackle each market within ASEAN, but yet have maybe perhaps sometimes your HQ in one country. Yeah. Yeah,
and definitely I think a lot of people will relate to that, right? With companies that have regional or global presence, and even as you mentioned, right, within Southeast Asia, within ASEAN, there a lot of differences in those markets, a lot of diversity that needs to be considered when looking at customer development and market expansion. Sandra, if we zoom out a little bit now, what could you share on maybe comparing Southeast Asia or ASEAN with the broader APAC region or even other regions outside Asia Pacific?
I think one of the beauties about Southeast Asia is its diversity, but at the same time, if you're a company and you want to expand into different markets, that also means that you have to figure out where you need to localize and where you can centralize things. So I think when you look at your customers in terms of B2B and B2C, the bigger the customer, if you target B2B customers and it's about large corporations, the more relationship building is probably the critical factor. You need to know like who to reach out to and how to nurture that relationship in order to understand what the requirement is. For B2C, I think it's just extremely critical to have that local knowledge, especially here in Southeast Asia, versus probably Europe or when you go to the US, where you have a massive market where you can pretty much like standardize your approach across the whole market without having to worry too much about local differences. So I think where that big difference is really language, like the language difference, but then also if you market to the different markets, like humor is probably extremely important and different in some of the markets than the others. Previously in a lot of, or at Cardup and also at Igloo, we work a lot with larger partners. So when you work with larger partners, you don't have to worry so much about that B2C factor, about the language barrier, about that difference in how to market to B2C customers, but more about the partnership building. You establish a strong relationship. It's about, if you work with financial partners, it's about your internal setup, the processes, the reputation. So I think it really depends a bit on whether you're targeting B2B and B2C. B2C in Southeast Asia is a tricky one, and I think the one where you have to really localize wherever possible.
Thanks. And speaking of geographies, right, and focusing for a moment on Singapore, another topic that I think is worth exploring when talking about growth and expansion is talent. And we briefly touched on the teams earlier and how important it is to make sure that communication to the teams is essential, as at the end of the day, our teams will be the ones executing those strategies. So we need to make sure that we have the right people driving these initiatives. We recently heard from the MAS chief that 6,500 jobs will be created in the financial sector in Singapore this year. And as it happens with most markets and in most categories, there are always gaps when it comes to finding the right talent. So I wanted to understand and hear from you a little bit, what has been your experience so far in the Singapore market? If you've observed any obvious gaps that you can share with us. And then also, what do you think that all of us in the fintech and financial sector need to do to help close some of those gaps? So Sandra, maybe we can stay with you and you can share with us your experience so far. Any obvious gaps that you've observed?
So I think the very obvious gaps in the last couple of years has always been tech talent, product talent, and maybe everything related to data analytics. More recently, I think more and more the gap in compliance talent has become quite obvious. And I think personally, one of the reasons is probably because so many companies now want to or are becoming fintechs or are becoming or have a payment arm or a fintech arm. So the talent that has a relatively broad understanding of what compliance means is just doesn't exist yet because there are only a few people who have gone through the full process of understanding compliance from strategy to day-to-day compliance. So if you are a compliance professional, I think now is your time. Get all kind of certifications and join one of these companies because compliance professionals right now are massively in demand. And there's a really massive gap of people who understand that, who can apply for licenses, who can implement the like end-to-end processes within a company, who can draft policies, who can talk to external partners, who can talk to regulators, and who can build a team internally as well to take over at some points. So I think where Singapore is doing a great job already is where, you know, they are trying to build these capabilities internally, but at the same time, obviously, also Singapore has always been very open to allowing foreigners to work in Singapore wherever these gaps still existed. And I think especially companies that are in the fintech space or insurtech space, tech space in general, we all face talent shortage at one point or the other. So having MAS being so supportive is tremendously important to us.
Yeah, thanks for saying. I think the tech one was probably the most obvious one, but it's interesting that you mentioned compliance, as that might not be as obvious to some companies. Sharon, how about you? What can you share?
Yeah, I actually second Sandra's comment about compliance. So, because I think that's the thing with tech, perhaps, with strong maybe internal knowledge transfer, you can kind of expand your tech team or product team even in the region or globally. But I guess when it comes to regulations or compliance, that's where local nuances comes in. With the growth of fintech being so rampant across every single Southeast Asian market, regulators are also trying to catch up. And they're keeping up quite fast, actually. So new regulations are always coming up. There's always a need to be in close contact with the local regulators to update them of your practices or for you to also adjust accordingly. So that's where I think compliance is definitely a gap right now, because it is a new phenomenon, right? They've kind of emerged for the maybe past 3-5 years. So the amount of experienced talent in this field is also lesser. So there is an obvious gap here right now. Yeah.
Okay, so we have two votes for compliance. Rohit, anything to add from your perspective? Compliance, anything else?
Yeah, I mean, they've both covered most of what I would say, but I would add, the ability to now hire remotely. That was something that most companies never considered pre-2020 or were very averse to. Pre-2020, it's now something that at least is being talked about and in many instances being practiced. So that takes the edge off, not for local situations like local positions like compliance, but in terms of tech, product, and for example, those are positions that can now be filled globally. And the second piece of that is the approach to hiring generalists. So it depends where you are in the life of a company, but the earlier you are in the life of a company, you can take the approach to hire more generalists rather than specialists. Some roles cater for it, some roles do not. So you certainly do not want to hire someone that doesn't have experience and is a generalist to run your compliance team. But for example, if it's product or something like that, you can hire somebody from outside the industry that can wear multiple hats, and that actually eases the burden of hiring specialists across every role in the company.
Right, I think you brought up a good point as well with the remote hiring as well in the current situation, and also the concept of whether a generalist or a specialist will be suitable for one particular role, and perhaps keeping an open mind sometimes depending on the life cycle of the company at that point. Mm-hmm. So we stay with you, Rohit, and we have about maybe five minutes left, and I wanted to explore maybe one last topic before we do the Q&A. And this topic would probably deserve a whole session, but let's try to cover just in about 5 minutes, which is the regulatory challenges, right? I think all of you have mentioned at some point in your answers, regulators and being in an industry that is generally regulated. This can be a serious bottleneck as well, right? I mean, we've touched on many aspects of growth and expansion, but the regulatory aspect of it may become a serious bottleneck in some cases. So maybe briefly, I wanted to hear from each of you what has been your experience so far, and what would you recommend to startups or other fintech companies that are starting or about to start their international expansion. Rohit, maybe we'll stay with you. As I mentioned, you can comment perhaps on securities and your thoughts on the industry in general.
Yeah, absolutely. I think it's important for all fintechs that are looking to start or expand to actually stay, engaged with the regulator early. Most regulators are taking a very progressive approach. As Sharon mentioned, this is not a local phenomenon. This is a global one, all the way from the United States to the UK to Southeast Asia. This is progressively, fintech is exploding all over the world. And I think the number one piece of advice is basically engage early with regulators and work with them. So regulators, sometimes they're seen as the boogeyman, in our industry, as the people that we don't want to get on the wrong side of, and there's a reason for that. But really, regulators are in place to protect consumers. Regulators are in place to protect the underlying financial economy. And so, looking at the regulations and the spirit they were written in, and engaging early with regulators, I think is something that's the most important thing from my experience that we can do.
Yeah, thanks for sharing. I think engaging with regulators, and there are multiple benefits for it, and it's also, I think, an obligation, right, for everyone in the industry to make sure they contribute to the ecosystem, and being engaged with regulators and working together is one of the main aspects of it, in my opinion. Sharon, in your case, I mean, one of the hot topics at the moment in the industry, what can you share about crypto?
Yep, right. So it's been an interesting journey, definitely, for the team. Many years of journey, definitely as experts, we also, actually, like what Rohit said, we'll be fortunate enough to have engaged our local regulators early enough throughout the whole journey. So, whatever we have, just a plug for our team, we have launched a Singapore-pegged stablecoin. It started getting out the market late last year, but it was really 2-3 years in the making. So that's the amount of effort that goes into something so new like this, that regulators are definitely interested to know what's happening. So I think it's always just professional courtesy to also update actually the regulators with what your plans are. So this is something unique to, I think, the Singapore market, where our local regulator MES, they're always open to hearing your plans. In other countries, I know sometimes there are nuances where sometimes companies are not as prepared to share their plans or be so open. So for us, I think you really have to kind of gauge and ensure that you're also kind of speaking the right person or the right department on the other side of the table, so the regulatory table. So I think, again, for us in Singapore, we're lucky that everything is centered within MES. But in other countries, there are sometimes different departments handling different types of license activities, whether from banking to payments to sometimes securities. They are all under different departments. So it's also your responsibility as the startup or fintech to make sure that you're talking to the right department, and really be very aware with their agendas and what are their plans, or what are they trying to really protect the markets or consumers from, and be aware with that, like really work with them on that basis. So yeah.
Okay, thanks for sharing. And maybe Sandra, some final thoughts on this, anything to add?
I think we have, like all of us being headquartered in Singapore, we are very lucky to have MAS, because every single time I have had to apply for a license in the last couple of years, or you reach out to MAS with questions, it's an extremely transparent and smooth and fast process, which is very unique, because you won't have the same experience across the region, unfortunately. There are some players which are probably equally smooth to deal with, but then in other markets, it's a bit more tricky to understand what the regulations are for relatively new business concepts, like, for example, crypto, or, for example, there are a lot of lending startups now, peer-to-peer lenders, that probably have a harder time figuring out what the license requirement is. So have patience, and be comfortable also proposing a solution to a regulator, because sometimes regulators might still be in that phase where they are trying to understand your business model and where it fits into relatively old regulations that haven't been updated in a while. So when you talk to regulators, make sure that you have a very strong and a very good understanding of where you fit in and why you think this would apply to us, and propose to them where they should place you. So that's just my 2 cents.
Great. Well, I think I have to thank all three of you for all the sharing and in the discussion. And I think now we should probably move to the Q&A. I've seen a number of questions coming in throughout the session. So maybe let's try to address as many of those as we can with the next 10 to 15 minutes. So perhaps I think that we'll start with the first question that I see here. How about the operation is struggling to keep with business that is also trying to catch you with changing regulatory environment, right? So I think it's probably related again to the regulatory environment, and perhaps, what would be your advice to companies that are finding it difficult to catch up on that? So maybe Sharon, you want to comment on that?
Yeah, it's definitely a struggle. Because end of the day, keeping up with regulatory environments, it doesn't move the dial in terms of revenue or actual traction, but it's a necessary thing to keep your business afloat, to really be even allowed to run the business. So I think for us, it really comes down to good old cash flow planning and HR planning. Really try your best to make sure that who's ever responsible for the day-to-day launches, product development, or go-to-market are actually different from the people that are handling the regulatory changes, because both sides are very taxing. But at the same time, if you really assign the same team or person to be handling both, it will really be a struggle for them to keep up with which is a higher priority. One will end up giving to the other. So if your cash flow permits, strongly advise to keep the two teams entirely separate, but frequent enough communication to kind of work through the future roadmap.
Yeah, thanks. I think it goes back again to communication and engagement, right, with regulators, and then see how much of that can you incorporate into your day-to-day in the company as well. We have another question. Maybe Sandra, I'll give this one for you on at FinTech industry level, which is basically the practical benefits of FinTech, right? I guess it's more like a broader question at industry level, and Rohit and Sharon, feel free to add to that as well. How does it implement into today's financial world, and how do you see the future of FinTech? So Sandra, maybe you can address this one.
Okay. So practical benefits, I think, hopefully most of us have experienced them. 5-6 years ago, if any of us wanted to do a cross-border payment, it was an absolute pain. You had to go to your bank, you had to set up the payment. You had no idea what fees you would be charged in the end. Either you would be charged more, or the recipient would certainly receive less. So the practical benefit is you have options now that have just come up in the last couple of years that enable you to have a much nicer, smoother payment experience, investment experience, much more transparent. And even the existing players had a reason to actually improve. So even if you're still using like your banking provider that has been around for a long time, they are also forced to really work on their offering, because they have certain competition now. The same for InsurTech, which is what I'm in right now. Like when you think of how painful it traditionally has been, and still is actually, to sign up for a lot of insurances that have a lot of benefit, for example, a health insurance. It's incredibly painful to read through all the terms and conditions and to try to compare the different players, because like these insurance companies never had an incentive to be more transparent. And I think now with InsurTech, the aim is to offer much more flexible solutions. So you would be able to only pay for a certain amount of time for an insurance if you don't need it for the full year. You would be able to have a much more transparent insurance option, and much more flexible, where you can switch it on and switch it off in your app, for example, and at a cheaper rate then as well. So the benefit comes in making things smoother and cheaper. And I think in the longer term as well, there will certainly be some consolidation. Like not all the fintechs might stay around forever, but I think the traditional players will have an incentive to improve, and the fintech players will continue to innovate faster and quicker, because they are smaller, they are less exposed to regulations, they can move much more agile than the traditional players. So for all of us, it would mean a much better experience.
Thanks. There are a few questions that touched on differences between B2C and B2B growth, Some others are also asking if you could share a little bit more around your success stories, expanding into Asia or across Asia. So maybe we can do a quick round, and then have all three of you maybe share a little bit more about success that you've experienced expanding across Asia, and then maybe a little bit more on how would you distinguish, right, or make distinction between B2C and B2B growth initiatives. Sandra, we can stay with you and then go Sharon and Rohit.
So the experience with consumers, it's I think either it's price or it's you have a great product and consumers just love to use it. The experience so far with business partners is that actually the larger the company, the more they do care about your compliance, your setup, like how you run your business, which a consumer typically is not interested in, right? When they make the decision to either use you or not. So like especially in the payment sector, a lot of the acquiring strategy has typically been trying to offer promotions, trying to get users to try us, or generally, you know, I'm a consumer myself. Like when I get a promotion, I'm more inclined to use someone for the first time, and then whether I stick around or not depends on what the experience is. For business customers, it's really that when I make a decision also as a business customer to use another business, I worry about the setup. I worry about the business continuity. I worry about their processes of protecting whatever data we share with them. So I would do a much more in-depth due diligence, and the whole compliance part is actually becoming then a defining point for whether I use someone or not, because that trust aspect is much more important. Also because switching a provider typically takes much longer.
Sharon, what about you?
Yeah, I can explain from a B2B angle because that's what Express is mostly in. So our success or at the start is definitely, I think where things takes off typically, it's if we find that one notable or anchor client to begin with, you know, and then after that, you know, word of mouth happens or the industry is aware of you being the provider for this iconic client, and then things kind of happen after that. But I guess the work needed to secure their very first client is a lot. So definitely it first starts off with their relationship building. So whether or not you really knew the potential merchant, or whether you had kind of reached out, I think a lot of effort needs to be spent at the start to understand their business case, whether or not there's generally still a gap that you can help them in. And good news is if there's still a gap, the timing is right, then that's where really the hard work kind of starts, where you have to find out really who are the stakeholders on their end of the table and really address all the concerns one by one. Chances are, because they are also your first anchor client, you are not very well developed to service them. So then that's where the hard work also and the speed of it to fulfill the needs really have to happen. And I guess the trust, you know, mutually for them to pick you over other people needs to also happen on their end. So it's also a tricky situation on their end. But you know, hopefully if fate permits, you know, despite all the hard work, you know, you secure them as the anchor client, then that's great. And after that, it's about servicing them properly and then off to the races to find the next similar client, building on that first brand that you have had now with the first anchor client. So we kind of had that for the crypto market in Singapore. So I think our first was Coinbase back in the days when they first was trying to experiment and doing it in Singapore. So we were fortunate to get them as a client. And likewise in Indonesia, what propelled us into the industry again is where now our partner. So we managed to win iconic clients like Pitfalls or others like Tuna Kita. You know, these are notable fintechs in Indonesia, and we managed to kind of win them. Then after that, it kind of builds one by one. So that's our experience when it comes to B2B.
Right. Rohit, anything you want to share? Thanks, Sharon.
Yeah, so I think whether it's B2C or B2B, and my experience has been primarily on the B2C side, but I think it comes down to delivering value to the customer. And so if you're delivering value to them, that's the starting point, and that will drive growth. So first of all, delivering value, that's the product. You have to be very clear who your market is. Once you have product market fit, typically growth will come. And so that experimentation, whether it's a brand new company or it's a new venture with an existing company, that I think is the key thing to focus on. So in terms of growth strategies, it's kind of coming down to what are you building, who is it for, and what value are you delivering to them, and will they value that? That's pretty much the kind of my 2 cents of it.
Right. Thanks for sharing. There is also maybe, Sharon, this one for you as well, following up a little bit on what you just mentioned around B2B. There is one question, I mean, this also around tips for scaling and managing growth teams for B2B, which we kind of touched on already, but there's also a second part of the question that says, am I right to assume that for B2B, growth should be sales driven more than marketing driven? So I think it's an interesting question, right? Given that we touched a little bit on the sales aspect before, so maybe you can share your thoughts on that.
Yeah, it's a great question. It's a question that we ask ourselves internally, the whole exercise around this too. I think it depends on the life cycle actually of the product or the company. If you're a very early company, I think it's somewhat a little bit sales driven when you're really completely unknown, but definitely kind of right from the start, you need to start building your brand about what you can do. But the reason why I say that at the earlier days, when you're B2B, it's more sales driven than branding, because it's also quite weird to just keep shouting your brand, but be known that you have not had a single client. So it's a bit weird. So at the start. But I think once you've had some anchor clients, I think that's where marketing is very important, contrary to maybe common thoughts, whereby sales is very much, to get the prospects, to ensure that the closure of the sales happen. But to really help out the effectiveness of the time and effort spent on the sales team, I think that's where branding and marketing must come in. Right? Because you have to amplify the success stories that you have done for other people, and start to build that brand persona, that trust factor, and really help your sales team such that, when one day the other end of the table, the prospects actually gets a random email or a LinkedIn, they are kind of warmed up, you're not a stranger. If anything, it'd be great if the recipient actually says like, oh, finally they have contacted me. Right? Then they have already known the brand. So that's great, rather than, who are you again? Oh, okay, I guess you have already done this for someone, but did you really service them? So that's the worst thing that can happen, right? If your brand is unknown, but you have really, serviced a good client before, such that when the sales guy actually approaches another person, there's still that doubt there of, did you really service this person? Like, why is no one talking about it? So you don't really want to end up on that level. So I think marketing really needs to come in hand to amplify what the company has done before, and also, the longer term things like brand persona and the trust factor for the company. Yeah.
Thanks. I think it's one of the multiple examples of how sales and marketing need to work together, right? There are many aspects of it, and this being one of them. So maybe we will have time for a couple more questions, and then we will wrap up. So there was an interesting question as well, and maybe Rohit, I'll give this one to you. To comment on local penetration versus international expansion, right? And I think that sometimes it might be positioned as a trade-off, and sometimes it could be different angles to it. So the specific question was, how do you decide whether to fuel growth via product diversification and deepening services in the existing market, or expand into new geographies? And what should you take into consideration when having this dichotomy?
That's again a very good question. I think it comes back to what Sandra said quite a while ago, which was, what do you want to be when you grow up? So as a company, you need to decide whether you want to be X and you want to be in multiple geographies, or you want to be very deep in a specific geography, for example, with multiple features. And I think it comes down to, what is your North Star, and how do you affect that? And it links, this touches, fundraising strategy, this touches strategy at the highest levels before you can decide whether you focus on building more features or you focus on expanding geography from a geographic perspective.
Yeah, thanks. I think definitely an interesting challenge, right? That a lot of companies will need to face, right? And sometimes it's not as easy to say A or B, right? Sometimes you will need to look carefully, right? And depend what are your priorities, right? Aligning to that North Star that we've been talking about, and then that will probably tip the scales one way or another. So maybe last question, Sandra, we'll go with you for this one. It's also an interesting question, and maybe not easy to answer. which is how will fintech be affected by the digital banks starting in Singapore? Do you have any thoughts on that? And Sharon, Rohit, if you have any thoughts also, please feel free to add.
It really depends on which part of fintech. I think fintech, we are using it as, like one word, but it actually includes like a lot of different streams for all of us. Like there's RegTech, there's InsurTech, there's payment, there's everything related to the payment sector, investments. So fintech covers quite a lot of industries that are all, I guess, trying to disrupt very traditional finance or insurance, like previously, like industries in the finance and insurance sector. And finance, like I said, anything from investments to payments to actually infrastructure, building infrastructure for these players. So Singapore, I think it comes back to Singapore being a relatively small market. So yes, there are digital banks coming up, but most companies in the fintech sector wouldn't really see Singapore as their main or core market in the future anyway. So I think there are enough people, or there's enough Southeast Asia is big enough for more players and for different types of players. The digital banks, they will certainly have a benefit. Personally, I'm still trying to see who exactly they are going to target, because I think the last time I looked at it, there was also a requirement that you're not allowed to undercut existing players in certain industries. So it will be an interesting one to see who the customers will be that are moving to these digital players. But then I think no matter what, these players will not only stay in Singapore, but they will actually move outside of Singapore. And then it depends on whether they are building all the capabilities in-house or whether they're actually partnering with other players in order to offer a full set of services to their customers. So right now, I think there are two different possibilities. The one is that they are building everything in-house and expand regionally, or they expand regionally by following a plug-and-play approach, where they are working very closely with other partners, which again will benefit the ecosystem. So how it will affect the market in general, I don't know. Sorry, that was a very long answer, but I don't know yet. I'm curious myself to see what exactly their strategy will be, and who they are targeting, and then how they are using the partnership approach versus building everything themselves. Maybe one of the others has a better answer. I'm curious to hear it myself too, actually. What are your thoughts?
Okay, I'll go first. I don't know. So my take is kind of like how fintechs today can already coexist with banks. In fact, more often than not, no, they're partners. They're not really enemies. But I think it kind of really depends. I think the fintech needs to be willing to strike out partnerships with the digital banks. There could be a chance that the fintech needs to make the first move, to open up the conversations first, be willing to share quite a bit about your plans. That's one. But I think the type of partnerships that can happen will be two fronts. And it really depends, I think, like what Sandra said, the type of fintech that we're talking about here. If the fintech has a very strong, dominant product niche, right, product offering, it could be a very clear case of like the partnership can happen where the digibanks have the user base or have the accounts, and they're plugging in the fintech's product offering into their wider network. So that's a very good partnership that can happen. The slightly trickier could be if, let's say, the fintech has the user base, but the digibank somehow has the tech stack but doesn't have the user base. Then that's a bit of maybe an odd partnership or dialogue that could end up happening. But yeah, by the end of the day, the fintech really has to make an assessment on whether or not they have a unique customer base that the digital banks will take a lot of time, perhaps even get hold of it, or if, let's say, the fintech can build some sort of product expertise and then partner up with digital bank, that's perhaps quite a natural progression, I think, that can happen.
Thanks. Do you want to add anything to this, Rohit?
Yeah, just a really quick one. I think from a kind of tops-down view, I think the digital banks will actually fuel innovation if they are able to spin up true competitors to existing players, existing fintechs. What that would do is that would unlock a fresh wave of innovation, because people are constantly striving for more, constantly striving for better. So if they're able to provide a full suite of services that covers, let's say, everything that I do, Sandra does, and Sharon does, we'll work on something better, and we'll take it to the next level. So I think it's a very positive development, and it will fuel innovation across the industry.
Yeah, and I agree with all of you, right? I think what you mentioned right now, I think is important. I think we should welcome it, right, in the ecosystem as something new, as something innovative, something that ultimately consumers will benefit from. And as Sharon mentioned, I think from a fintech perspective, I mean, fintech traditionally starts from looking at what's out there and trying to add a layer and make it better, right? So I think by looking at the right partnerships, by looking at what's the offering, what's the targeting that those digital banks are going to come with, I'm sure there will be good opportunities of collaboration between fintechs and digital banks in the same way that fintechs are already collaborating with banks. So I think with that, I mean, we really need to wrap up the session. So I would like to thank you once again, all three of you, Sharon, Sandra, Rohit, for your time, for all the sharing. I'll just do a quick wrap up before we close the session, and just to remind everyone, right, we started looking a little bit at effective growth strategies. We look probably at build and borrow as the two that came up a little bit more often in Sharon's, Sandra's, and Rohit's experiences, given that, you know, buy sometimes is not accessible, right, depending on the stage of the company. We've also touched on how important the longevity of the partnership could be, and whenever you look at partnership, on how important it is to look at maybe the long-term approach of that partnership. We've also discussed around planning and measuring growth, and we've mentioned a few times that concept of the North Star, and also Rohit shares some interesting thoughts around experimenting, right? Making sure that you run experiments when you're approaching growth and expansion, that you allocate some time for the teams to do that, and that you are lenient sometimes with maybe some of your day-to-day numbers or metrics to be missed for one particular week while you're experimenting. We've also discussed that maybe partnerships is one interesting shortcut, right? If there is any shortcut in a regulated industry, it could be around partnerships. It could be around finding the right players to partner with that have the right licenses, for example. And we've also touched on some of the pitfalls and challenges. So, for example, Sharon was mentioning, right, if sales gets ahead of product, sometimes that could come at a high cost. We've also discussed the diverse region that we're in, and how important it is to look at the nuances of each market and have people that really understand those nuances and have the local knowledge. And that could be in-house, but that could also be, again, via partnerships. And then we also touched briefly on some of the talent initiatives here in the Singapore market. We've mentioned, both Sandra and Sharon highlighted the importance of compliance rules as one of the gaps in the market. Tech obviously being one that I think most people are aware of. And then Rohit added a couple of points on how hiring remotely in the current situation is another aspect to look at, as well as maybe being a bit more open-minded when looking at whether you really need a specialist to fill one type of position, or if a generalist that has a bit more broader knowledge would do. And lastly, and definitely not least, the importance of engaging and working with regulators, right? I think in the industry, everybody would agree that there's definitely a lot of benefits in doing so, and ultimately benefiting the overall ecosystem. So with that, again, I would like to thank everyone for the attendance. I hope you have enjoyed the session, and see you soon. Stay safe.